Let's move on then, and let's talk about the home improvement theme. According to Dam Capital, under the homes improvement theme, pipes are a steady compounding space and provide safe harbor during rough times. We are joined by one of the leading pipe manufacturers here in the country, Finolex Industries, and we have with us Mr. Ajit Venkataraman, the MD of Finolex Industries, who joins us on the show. Hi, Mr. Venkataraman. Good morning. Thanks so much for joining us. Nigel on this side. Well, I wanted to ask you about demand first up. How is demand shaping up? Have you got a sense in terms of how are the inventory levels as well at dealers? And would you stick to that guidance? I think you were guiding for around 10 to 15% volume growth. On the cards?
We continue to give that projection in terms of 10 to 15% growth year on year. And that growth is expected for the next 4 to 5 years. We are seeing the demand to be fairly robust. There is some sluggishness typical for the Q2 for this industry. During rainfall, July, August, September, these months, the pipe sales is typically lower. And that is what we are seeing, but we are seeing a little bit of an uptick compared to last year.
All right.
The demand is likely to pick up after Diwali, and that is typically when the demand picks up.
Okay, all right. Could you split it up for us? You know, this 10 to 15% will be agri and non-agri. How do you see both these two segments growing? Because I think as of now, 70% is towards agri and 30% is non-agri. So you want to split up the volume growth, and also, are you growing faster than the industry? Are you holding on to your market share?
Market share is something which is very difficult because there is no central agency which consolidates the numbers from various players in the segment. In terms of agri growth, we are seeing in the higher single digits, whereas for the non-agri segment, which is plumbing and sanitation, we are looking at upwards of 15%. So in the non-agri segment, we are growing at a faster clip than market.
And you've kind of, remember, sort of emphasizing this the last time you were on as well. Ajit, hi, good morning. Prashant here. On the raw material front, what's the situation? I mean, oil prices are now closer, almost in 3 digits. How is that feeding through into raw material prices?
See, raw material prices, I think there is not too much of a correlation between the crude prices and the PVC prices. PVC prices, the market is apprehensive of further price drop, and therefore we see a certain degree of sluggishness in the past 2 months, August and September. But our forecast doesn't seem to be indicating that. The PVC prices has been trading in a very narrow range between 75 and 82 rupees per kg. And we expect it to be in that range going forward as well. There is no reason why there has to be a significant change with respect to that. But the market reading seems to be a little bit on the price dropping side. And therefore, the network, the channel is being a little bit cautious in taking on more inventory.
Okay.
I wanted to talk, of course, Mr. Venkataraman, we'll come back to your business, but I wanted to understand with this surplus cash that you have in your books, right, almost 1,700 crores lying on the books, what is the plan? Will you be giving back to shareholders in some way? Will you be putting it to work, for expansion of the company? Because earlier you had said that you will announce a plan of utilizing the surplus cash in a bit, but I don't think that has happened just yet.
See, we have an annual Capex spend of close to $200 to $250 on an annual basis. We are also evaluating new projects, and that is something, if whatever is not utilized for expansion, will be returned back to the shareholders.
Okay. So when you say evaluating new projects, can you tell us what could the growth triggers, growth avenues for the company look like over, say, the next 2 to 3 years?
See, as I had mentioned before, we are expecting the pipes and fitting segment to be growing anywhere between 10 and 15%. And for us, we need to get into the expansion mode given the capacity we have today. We need to look for expansion, and that's exactly what we are trying to do right now.
Okay, all right. Mr. Venkataraman, what is your capacity right now? And say in the next 2 to 3 years, what does it head to? I think you're functioning at higher capacity utilization levels.
Correct. We have a capacity of about 370,000 metric tons for the pipes and approximately 50,000 for the fittings. And this segment, we are expecting that the growth to be happening somewhere in the range of 10-15%. And therefore, we already are at a fairly high utilization, approximately around 70%. And therefore, it is important for us to look at expansion.
So what is the number then? What does your pipes move to from 3.70? In the next 2 years, 3 years, it moves to what level? And fittings from 50,000, it moves to what levels?
See, last year we did 303,000 metric tons, out of which pipes was around 270,000 and fittings around 30,000. Fittings we expect to grow upwards of 15% and pipes approximately 10%. So that we have to do the math.
Okay, all right.
Okay.
So you're expecting, I wanted to know your capacity, but I think you're giving us the volume growth numbers. But let's keep that aside for the time being. What about this?
As I mentioned, pipe capacity is 370,000 metric tons per annum, and fittings capacity is about 50,000 metric tons per annum.
Got that. Okay. Got it. Also, if you could tell us your spreads, because for a business like yours, the PVC EDC spread is important. So what was it in Q1? What is it currently? And where is it headed?
So we were looking at around $250 for the PVC EDC spread. And typically anything above 250 is something which we are comfortable with. So so we are in the range after a long period of time, almost 2 years, we are in that spread right now. And we expect it to be steady at this point of time for the next 2 to 3 quarters.
I wanted to understand in this resin segment as well, there was a sharp contraction in PVC prices on a quarter-on-quarter basis. How is that segment doing now, and what is the kind of potential that you have there? Because earlier you'd said you'll deliver volumes of 230,000 in FY24. Are you maintaining that?
Yes, we are. We have, as you know, we have a PVC manufacturing facility in Ratnagiri, and typically during the rainy season, the ports are closed, and therefore we do have a inventory accumulation before the month of May. And when there is a significant drop in prices, it impacts the inventory, and there is an inventory loss we typically have to take. On the other hand, if there is a price increase for PVC, at that point of time, this comes to our benefit. And therefore, the drastic movements you have seen in the last couple of years is because of the volatility of the PVC prices. Since December of last year, 2022, till now, the PVC prices have been fairly steady. They have been in the range of $750 to $820 per metric ton. And therefore, we don't see too much of inventory gains or losses coming our way any of these quarters.
Got it. Ajit, just one last question. This Jal Jeevan mission, if you can give us a quick kind of snapshot view, is how much demand do you expect from this, or do you think the bulk of the demand has already come through for the industry, not just you?
Yes, it is completely dependent upon how the government releases the funds, and it has been trickling in. We do not deal directly with many of these government projects. It's just our dealer and distributor network which deals with it. And this has been very good for the industry in general.
So what's the offtake for as an industry as a whole? You would have an idea? What has it been? Because Centre has been implementing this since late 2019, along with states. So, what's the offtake, or has it kind of slowed down?
It's a difficult question for me to answer because we don't directly deal with the government tenders.
Okay, all right, fair enough. We'll leave it there, Ajit. Thank you very much for joining us. Good speaking with you, and thank you for taking out the time and being here. We'll take